the markets. Then Varun Lohchab from HDFC Securities is now joining in. Varun, good morning. Thank you for joining in. IndusInd Bank, of course, can't not talk about it. After the loss that it was reported, the commentary that you heard from the management yesterday, do you believe that the worst is now done, or there are more questions than answers here?
Yeah, hi, good morning. So IndusInd, it's actually there are still a lot of moving parts. We are not able to get an exact handle on the underlying numbers. But our view on the stock, we have a reduced rating. And we believe even if this is, probably all the skeletons are out, and if this is the worst number, even then we believe the road to recovery will be a prolonged one because a lot of things have to fall in place in terms of, even the liability franchise is weakening a little. The investor confidence is really shaken up. So I think the path of ROA improvement will not be a very smooth one. And therefore, we believe it's better to avoid it at the time being. And, we have other stocks in the sector which are looking more attractive from a 12 to 18-month point of view. So that's our view on IndusInd.
Varun, do you have a view on BSE? Because sources, I don't know if you've caught the story that Yash has been putting out, but sources have said that SEBI's circular on index expiry days for exchanges may come soon, and NSE has likely applied for Tuesday as its expiry, which is basically BSE's date. So for NSE, it shifts from Thursday to Tuesday, if approved. So if that happens, what could be the potential impact on BSE, and how would this play out?
See, again, if it were to happen, there will definitely be an impact on BSE volumes because the pace at which they have been gaining market share in the derivatives market was really strong. We currently have an ad rating, but our target price is not materially higher from the current price given how sharp the run-up has been on the stock. Our thesis has been on medium-term market share gain story in derivatives, which has played out to a large extent, but we believe it is still, there is some more room for market share gains over next 12 months. But if this were to come, this will definitely impact, in terms of earnings because the pace of market share gain, accelerated after the change to 2 expiries per week.
Right.
And Tuesday would always get a better volume market share. So. But
right.
We won't be able to comment on specifics till it comes out, and gets.
Varun, welcome back. Varun Lohchab is still with us. Varun, thank you for staying on. I can't not talk to you about defense, right? Because there is so much that has happened. Stocks are up 50-55% in the last month. And the broad gamut of the sector that it is, where do you position yourself in? Would you go in with the traditional names like the BELs and the HLs? Do you go with the shipbuilders? Or do you go with the equipment suppliers like Zen? Or even for the technology names like Data Patterns?
Unfortunately, won't be able to comment much on that because we don't cover the defense stocks, So, but as a space, obviously in our CapEx report, we have been consistently highlighting in the last couple of years that the defense spending by the central government seems quite structural. The runway of growth is fairly large for these companies. And in addition, now even the export story should pick up for the sector. But beyond that, we don't cover individual stocks, so won't be able to comment.
But do you cover individual stocks within the pharma basket then? Because that is another sector that has been under a lot of uncertainty with regards to the tariffs that have coming in, the pricing pressures in the US markets. Again, the generic players, the CDMO players, where in pharma?
So pharma and healthcare, both we cover, and in fact, we like both of those spaces. We have been quite positive on names like Sun Pharma has been our top pick for the last 12 to 18 months. We also like Torrent Pharma, Eris Life Sciences among the smaller names, Alchem Labs. So these are some of the top picks from the pharma space. Even CDMO space looks quite attractive from medium to long term. The growth rates are looking attractive. Inquiries have increased, though I think FY26 numbers are not looking that great for some of the CDMO companies vis-a-vis the expectations, which were very elevated. But from a medium term, 2 to 3 year view, we are we see good opportunities in the CDMO space as well. So pharma and healthcare, I think overall is a good space to be in from a next couple of years perspective.
What about banks, Varun? I did ask you about IndusInd, but you mentioned that there are other names that where you could find value in. So would you like to go with the larger private banks, which have still been there and thereabouts in terms of giving returns, but it's not the 15, 20, 25% returns that you would find elsewhere? So private banks, PSU banks.
See, I think 20-25% return expectations would be a bit too much from a large sector like banking. What we are anticipating is that next year would be better for banking sector from two perspectives. From a smaller bank's perspective, the credit cost will normalize upward. Credit cost will be better for some of the smaller banks which saw a lot of pain in FY25. And at the same time, the large banks and overall banking sector will have some NIM pressures, which will lead to overall PAT growth of around 10 to 12% for our coverage universe of the bank. So, but valuations are supportive, so there is some room for PE re-rating. So to expect 12 to 15% return from banking stocks would be a more reasonable expectations. And we believe the larger banks are better positioned to capitalize on the growth as well as to be able to navigate the volatility and the pockets of stress in terms of the credit on the credit side. And the liability franchise, the cost of deposits, that has already some of the pain has already gone through in terms of the NIM compression. So incrementally, I think beyond FY26, that pain should also subside. So large banks, ICICI, SBI, have been our top picks for quite some time. And even Axis Bank we like. So I think these three would be the top picks in the banking sector. We are still sticking with the large banks.
All right, Varun, thank you so much for sparing time and joining us. Looking forward to having you more often on the platform. Take a short break. The management of Team Lease joins in on the other side. Stay tuned.